Today, we're going to get into why the XRPL is the ideal blockchain for the tokenization of real-world assets and why banks and institutions are going to choose it over things like Solana or XDC or Bitcoin or Ethereum. We're going to break it down and go through the amendments one by one that have been instrumental in placing it as the main blockchain that banks and institutions are going to use. And we're going to go through three different things: the core features, compliance, and why some of the tokens issued on here are. So first up, we're going to talk about the core features of the XRPL and why it's the ideal blockchain for the tokenization of real-world assets. First up, number one, you guys may remember this, but back in 2022, they launched NFTs on the XRPL. And this was way after the craze on Solana and Ethereum. And the main difference here is this is not a layer 2. It's built into the mainnet of the XRPL, and you're able to issue NFTs directly on chain. There are smart contract features and components that are associated with these NFTs. You can still do the royalties, you can still fractionalize them, you can trade them, you can put them up as collateral, and that's what you need. So many people believe that you can band-aid stuff or add a layer 2, but really you're just adding more complexity to a system. In reality, banks and institutions are going to want to be able to use one network for all these things, and so that's why NFTs on the XRPL are fast, cheap, easy, and they were late to the game, obviously, after a lot of other people had minted them on their network, and we saw a big crazy run on price appreciation for NFTs, but they really do have real-world utility. You could mint deeds to a property, or carbon credits, or the real estate itself, and be able to trade those, and again, fractionalize it, and be able to have royalties on it. There's many things that you would want to have a non-fungible token for, which is what an NFT is for those that may not know, but those are native to the mainnet thanks to XLS 20, which was passed again in 2022. Later on in 2024, we finally got automated market makers. And this was early in the year. They had proposed the amendment back in like October 23, and it took a long time before all of the validators on the network came to the consensus and actually passed this deal. And there's a big difference between these AMMs and the AMMs on, again, some other networks. So Ethereum and Solana and many other smart contract networks have automated market makers. The difference here is people that represent the value inside of the liquidity pool are not taxed. The LP token increases in value, and people bid or arbitrage that market and have to bid an LP token. So they burn those when they bid for those opportunities to arbitrage those markets, and that reduces the supply of the LP tokens in the pool, and therefore it increases the price of the LP tokens in the pool. So as these become much more adopted and used, we do have a few AMMs on the XRPL. We have one that's a good friend of mine that is actually the largest AMM currently with $15 million in liquidity in crypto land. Shout out to you guys. But this is a game changer, and it creates a vibrant market, and it's alive and well today. And it's what is going to make the XRPL the go-to platform for liquid trading of tokenized assets in the future. And right on that's heels, we don't have this up for vote yet, but it has been proposed, is XLS 65D, and that's liquidity pools on the XRPL. And again, you can use that LP token from the AMMs, and then you would also get an LP token for representing your value in these pools. But this will pair assets, right? So you got ROUSD against XRP. You could put that in the pool. I think that these are going to be a bit different though. You'll be able to contribute your XRP to a liquidity pool, and somebody will be like a general partner that will manage that pool and allocate that appropriately to be able to generate returns for the partners or the LPs in the pool. And this is actually, I think, going to be adopted at scale for people that are running funds. This will be a really good way for people to allocate capital in kind or in stable coins or whatever other issued assets on the XRPL exist into these pools that are then managed by somebody else and promise a return. And I think these will end up being run as securities. The AMMs, it's going to be difficult. They are going to be a market, right? And it's an automated market maker. So it's a DEX that allows for interoperability between these assets and real-time settlement and a lot of liquidity between issued assets on the XRPL. And with that, it's a big deal for institutions. It removes a lot of the slippage, and so do the liquidity pools. So for all of these reasons, faster, cheaper, less slippage, easier in and out, all those things, I think you're going to see institutional adoption of these AMMs and liquidity pools by institutions over some of the other options that are a bit clunkier on maybe Solana or Ethereum. And again, participating in these pools, your returns grow tax-free. So It's a big deal until you take the returns out. Next up, we have XLS 47D, and that was price oracles. And so none of this is possible. Like, you're not going to be able to trade real time or have real market data or pull prices from institutional trading on the stock exchange or for bonds or for commodities or for Forex or for whatever other market they're going to be trading on the XRPL for these tokenized real world assets, unless you have price oracles. So you need interoperability with Chainlink, you need interoperability with the FTSO or Flare time series oracle, maybe IOTA, maybe even DAG or Constellation. There's going to be some winners in that space. The XRPL itself is not an oracle. You need some way to move data from the real world that we all live in into on-chain environments and into smart contracts, so those can then self-execute based on the constraints that are listed there. And without the integration of price oracles, these markets are just a fantasy on the XRPL. But this has been passed and it's ready to go. And so again, this is one of those things that I think people kind of discount, but these are all precursors that need to be in place before we're going to see the real big prices for XRP that a lot of people are hoping for. Next up, we have XLS64D, and that's pseudo accounts. And this again is, just like 65, has not quite been passed yet. It's not even put up for vote yet. However, it allows for the ledger entries to hold and manage assets on behalf of others. So basically you're delegating the value somewhere else where your asset doesn't have to move. So right now we provide institutional custody for our clients at Anchorage. Their assets would be able to sit in their accounts on the XRPL, and then we could delegate that value somewhere else using a pseudo account like XLS64D when it's passed. And it adds a lot of flexibility to the management of assets. It also creates a world where the custody rule that was proposed by the SEC in 2023 could actually be adapted and used by banks and institutions, whereas today it's really not feasible for the way that things are structured. But if you are able to delegate things or create a representation of value somewhere else and hold the asset there in institutional custody with multi-party signature and controls around it, that kind of leads to, again, the XRPL being pretty much the only game in town when it comes to tokenization of real world assets. And not to say there won't be other chains that adapt this feature. Again, the XRPL doesn't even have it right now because it hasn't been voted on, but it has been proposed. And I think that it's going to be a big piece of what makes this blockchain the most compliant and secure in comparison to others, and why it gets the adoption that we're hopeful for. So that kind of leads into the next section here, which is the compliance and the security enhancements that have been added in to the XRPL. So first up there, we're going to talk about side chains. The main side chain that most people are aware of is going to be the EVM side chain. We also have the Hook side chain. The EVM side chain is a big deal. JP Morgan made a big bet on Ethereum, and they built their infrastructure called Onyx, which is EVM based, and they needed to be interoperable with the XRPL. And so we have Axelar that bridges Onyx over to the side chain on the XRPL and would allow for settlement through XRP for any transactions or tokenized assets from that environment across others. Axelar, another big player, but again, without that EVM sidechain, it's not really going to work out for the XRPL. Without Goldman and JP Morgan and these other institutions giving it the green light and having interoperability or a way to participate, I don't think they were happy about that. So now that we've seen that kind of come alive, these sidechains allow for separate blockchains to be linked to the XRPL, which is a big win for compliance because different countries have different regulations and you might see different winners in other places. Bank in Europe could use a sidechain tailored to EU's laws while wanting to stay connected to XRPL's global network. And so sidechains allow for testing for new features also, like hooks, before they're launched on the mainnet. Since this is live, banks can now start exploring these sidechains for regulatory alignment. And I think that's what you're going to see. I think you might see multiple jurisdictions issue different sidechains on the XRPL that have the regulatory confines for how they are supposed to transact. You might even see specific institutions operate on a specific sidechain, but they will all operate and be connected to the mainnet for settlement between these independent sidechains. And that's what allows them to maintain regulatory compliance, but also be interoperable with all of the other jurisdictions and other players on the planet. So that kind of leads into this other piece, which is for KYC, KYB, you have to know who you're participating with. Sanctions and the SWIFT system are a real thing. And one of the promises of the XRPL is that it is going to be the settlement layer for the SWIFT system. But to be able to do that, you need a decentralized identity or DID, which gives users control over their digital identity. For banks, this streamlines KYC, which is know your customer, and it also makes it a lot less costly than what it is today. We work with providers for KYC for the RIA and other things that we do, and we have to run one of those pretty much for every person we deal with, and KYB or know your business. And if you could just share a hash from your digital identity that's already been verified by third-party components or players that are interoperable with the network and hold that data and then just share it securely based on the needs of who you're participating with, that makes that a lot more streamlined. And it's a lot cheaper. And this feature being live makes onboarding much faster and more compliant with new global regulations that are rolling out. And I think, again, this is one of those things that sets the XRPL apart from other networks. Other smart contracts, there's a lot of people out there looking to solve this problem, but they are a separate company that are interoperable with multiple chains, and they're doing KYC and they're charging people for the KYC. But I think you're just going to have a repository of data that's securely held somewhere. You'll have to verify yourself once. I don't know if you've ever done this, but like if you participate on multiple platforms, as an example, we do a lot of private equity deals. And if you were to go sign up with Forge and then Equities In and then Hive or Link2 or NPM, there's a lot of people out there that do private equity deals or broker those. And every single one of those, you have to go through KYC, KYB over and over and over again. So if you could just show up and share a hash from your DID, and they were able to get whatever information they needed and then be able to verify that on chain in seconds, and you wouldn't have to go through and put everything in over and over again. It would just save both parties a lot of time and a lot of headache to know that they're dealing with the right person and you're not on the sanctions list, not OFAC and BIS, you're checked and you're good to go. And that kind of leads to the next component here. So if you are going to be participating on private equity deals, then you're going to need some type of credentials, most of which are going to be accreditation here in the US, but there's sophisticated investor there in the UK and other jurisdictions. You might be a qualified purchaser. You might be a qualified client. So there's a lot of things or credentials that you might have that would allow you to participate in different ecosystems or bar you from participating in certain ecosystems. And so this amendment, XLS 59D, which is not quite passed yet, it's got 27 out of the 28 votes that it needs to be able to be passed on chain. It allows for verifiable credentials like licenses or certifications. Those would be stored and you could check those on the XRPL. This is perfect for banks needing to verify clients' credentials instantly, reducing fraud and all the paperwork like I mentioned before. So example, a bank could run and confirm a borrower's professional license in seconds. This feature would enhance trust and efficiency in financial interactions. And again, this would happen in seconds instead of days, which is what it takes now.